What's good, day traders? Welcome to another day in the bootcamp, and today we are going to be talking about building a trading system. But before we get into building this trading system, if you're new to the bootcamp, make sure you like and subscribe and join the community. Link is in the description below for the Discord server. But guys, building a trading system. Now, this is something that it took me a while to make and build. It's not something that you're just gonna get off straight off the bat. Why? Because you need to test out different things within the market. And so what I've done is this is something that I've taken out of a book, but I've changed it up a little bit, made it a bit more into something that works for everyone. And so I want you guys to try this out as well, because building this helps identify what kind of trader you are. And it's really important to understand what kind of trader you are, especially when you're new to the trading journey. It's very good to understand who you are, why you're trading, and the processes you have to take when trading. Because a lot of us, we get so excited on the profits, we actually forget that we need a system. We need something to make sure that we can replicate the profits. And so if we don't have that system in place, or we don't ask ourselves these type of questions, what's going to happen is you are going to get wins and you're going to get losses, and you won't know why. Okay. And so this here is going to be like your core of your trading, right? This right here, what I'm going to go through right now, is the core of your trading. And this right here will help you on every single trade, and also goal setting and understanding your rules. And the thing about trading is that I can give you my rules, I can give you my system, and the unique thing about trading is that you can go build off something like that. But the difference is that you are your unique trader. Just because I risk a certain amount doesn't mean you have to risk, right? We all have different risk tolerances. We all have different goals. We all have different methods of looking at things. And so, just like an example I always give is like with sports, right? Everyone can show you, like, for example, in basketball, I can be really good at, shooting 3 pointers, whereas someone else could be good at the layups or mid range. And it's like we both have two different systems, but we're still, a good player. And that's the same as in the markets. It's like you can have a trading system, I can have a trading system. They're two different trading systems, but at the end of the day, it's like as long as it's profitable and it works and you strict to it, you are going to be a winner in the markets. And so let's look at the first question. This might be a little bit lengthy video today, but we got a load of questions and we're going to answer it and we're going to go through it, and I can't wait for you guys to do it yourself. And so we're just going to go through it together, and we're going to build a system that would work for me, and then hopefully you guys can use that, and I'll explain every question as well. And then hopefully you guys can take a screenshot, ask yourself these questions, build your system, and have it stuck on the wall. That's literally the way to do it. I normally have it on my phone, but if you can stick it on the wall, even better, because it's right there in your face, right? So let's get right into it. So are you a market specialist or a trade specialist? Okay. The difference between those two things are: a market specialist will look at one singular market and will only trade that market. And I've been like that for years, right? I only used to trade gold, right? I only used to trade this currency pair right here. Yeah. And like it was good, but the thing is, it got a little bit boring. So then I went into being the trade specialist, where I'll look for different types of patterns, let's say head and shoulders, or double bottoms or double tops, and I'll go through every single pair and I'll look for it. But here's a huge but: I am still a market specialist. And the reason why I still believe I'm a market specialist is because I don't fixate on all the other currency pairs. I only look at gold because gold is my favorite currency pair. But I also have these other pairs in addition, where I would just trade not for fun, but if I see a setup and I'm pretty confident, I will go for it. But I don't go ahead and call myself a trade specialist, because I'm not just going to trade a random currency pair. Like if you guys told me to trade, I don't know, AED JPY, right? I would have to look at that pair, understand that pair before I can place a trade. I'm not just going to place a trade blindly because we bounce off a key level and it's formed the head and shoulder pattern. And I wouldn't place a trade just because of that. I will have to understand the pair, backtest the pair, understand the market. How does that pair move? Is it fast? Is it slow? What's the pips like? How much risk can I put in? Things like that. Is it a choppy market? Is it a slow market like Euro USD? Or is it fast and volatile like gold? Right? So you need to understand. So if you're a beginner, I recommend you become a market specialist, because the market specialist means that you focus on one currency pair, right? And you master that one currency pair. Like, you master it, right? So you could just know the prices off the back of your head. You know exactly how the market moves. You know how much lot size to put in. You know what kind of, for example, 30 pips, 40 pips. Like, okay, I need to risk this much. And I don't know what's going outside, guys, but it sounds crazy out there. Um, but yeah, are you a market specialist or a trade specialist, right? Understanding which one you are and stick to it. If you're a trade specialist and you like the head and shoulder pattern, go ahead, trade only that pattern. But if you're a market specialist, fixate on that. You can't go off the balance. Like, when I first started off as trading, I was, looking at 20 different currency pairs, and it was so confusing. I turned into a market specialist, and that's where everything excelled. That's where everything went to the sky for me, right? So just a little tip, especially for beginners: focus on one currency pair, master it, become good at it, understand it to the T, and then move on to the next, and just keep conquering. It's like, the Infinity Stones. Thanos didn't go and get all the stones in one go because he wouldn't win that battle. Whereas he went to every single stone individually, gained the strength off those stones, and then continue going on. How many hours of daily screen time do you allow yourself? Now, this is very, very important, especially for day traders, swing traders, kind of like swing traders, but scalpers and day traders. Very, very important, because we can look at the charts for hours and hours and hours, and we won't even realize it, right? Like, I don't realize how long I look at the charts for. And so what I like to do now is I'll have like a little timer, or like I'll tell myself, okay, around 2 to 3 hours a day should be more than enough. If I do exceed more, I am overlooking at the markets and I could get analysis paralysis, right? And so I don't want to overlook at the market. I don't want to stare at the market. So I give myself around 2 to 3 hours within the market. I don't go too crazy within the market, because at the end of the day, guys, time equals money, like I told you. So if you guys want to make money, you need to make sure that you're putting in that time. Like, especially for me as a day trader, like, I only need to put in like maybe 2 to 3 hours in a day, and that 2 to 3 hours is literally just looking for an entry. And normally what I'll do is, like, Monday, Tuesday will be my long sessions. Wednesday, Thursday, Friday is literally my sessions where I'm like, okay, I already had a plan set in place. I'm waiting for it to execute. And that's how I usually go out throughout my week. I don't, if you're a scalper, I wouldn't look at the markets all day, because all that profit you made in the morning session, you might just lose it in the afternoon session or even evening session, and it's like, what was the point of trading, right? So understanding the amount of time you put into the markets. Don't overlook at the markets, but don't underlook either. Don't just go, okay, I'm gonna look for 10 minutes, look for a chart. Da, 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 da. No, have a system, have a flow. Get in that zone. For me, it takes me around 15 to 30 minutes to really lock into a pair, really understand how the pair's moving, especially for the week. And then once I'm locked in, I'm just, setting my levels, setting my alerts. Alerts has been a killer for me recently, especially like I've been super busy, setting up the boot camp, super busy with the Discord members. And so setting alerts has helped me, because now I don't have to just stare at the markets. I can do all the other things that I want to do. And I don't have to, stare at the markets. I can chill. I can do whatever I want to do. I can work on the projects I'm working on. And, as soon as that alert goes off, I roughly know where the market is, look at the market, 10 minutes maybe actually, look for an entry, and then boom, go for that. Okay, so which trading session do you trade? This is also very, very important. As a trader, I specifically used to just trade any time. Like, as soon as I saw a pattern or as soon as I saw something, I traded. And so when I was building data for myself, and journaling is another topic that we'll go through later on in the bootcamp, when I started building this data, I started to realize that there was only one time frame that I would trade in. And so I actually have it written somewhere in my book that I wrote like 2 years ago. My journal book, right? And I told myself the only times I trade is between either just after London session, so around like 11 a.m., right, in the UK time, or New York session. And that's like kind of my sessions. I don't go for anything crazy. I don't go for like the Asian session. Actually Asian session is not even crazy, but like that's late night for me. So it's like I'm not gonna stay up in the markets for that. And so for me, it's like the sweet spot, like 10, maybe 9 to 11:30, and then 1 p.m. to around 3. So just after lunch in the UK. It just, for me personally, is like the best two times or best two sessions. And then when I'm in my session, I put everything on D&D. I don't look anything. I lock myself up and I really lock in, right? Because I want to make money in this session. I don't want to waste the session. And within like 10 to 15 minutes, I will kind of get the gist of, is this session right for me today? Like, for example, a few days ago, I've been going through like a losing streak. And so I saw this was on Thursday, and I saw just before Thanksgiving, New York session. It was very choppy. And I told myself, you know what, I'm just not going to trade it. And I realized that within minutes, right? Within literally like sitting on the computer for like 10 to 15 minutes, I realized it's going to be choppy. I was like, you know what, I'm not going to trade it today. But so very important to know your training sessions, because that's what's going to help you reach your optimum trades, reach the trades that you want to take. Especially like I used to make this mistake where I'll trade every session or trade any time, and then I'll make money and I lose the money straight away, or even lose everything straight away because I'm not trading the right session. Like for example, Asian session, very slow. It takes like flipping hours to even get 10, 20 pips, right? Whereas like New York session, very fast. London session, very, very fast. So it's like you need to find the gist of every session, figure out what you like, and then trade within those times. And that's where like, building data helps you so much. Which time frames will you trade? Again, very, very important question. You need to understand, your time frame analysis. You need to understand, okay, am I trading on the 4-hour chart? Am I trading on the 2-hour chart? Am I trading on the 15-minute chart? What am I trading? What time frames am I looking at? Right? So for me personally, I'll look at the 4 hours to give an overview, maybe the 2 hours or 1 hour to see like chart patterns, and in the 15 minutes I'm scaling in to enter. 5 minutes to 15 minutes my entry, right? And so I've put systems, like I've told myself this is what time frame is for me, right? And so like for example, like I wouldn't look for an entry on the 1 hour, and I will never do that. Why? Because it's not the time frame for me. And so I've put in like, okay, 15 and 5, that's the time frame for entries, and that's it. 1 hour, 2 hours, looking for chart patterns. 4 hours and daily, looking for my bias, looking for my trend, looking for, what price is actually doing for the day. And so putting that in place is going to push you to not place the wrong trades. For example, if you don't see the entry at 50 minutes or 5 minutes, there's no way I'm checking the 1 minute. There's no way, even though the 1 minute might give me that entry, right? Why? Because the 1 minute is too much noise, too much things going on in the 1 minute, right? Whereas the 50 minutes or 5 minutes, yes, it is a little bit delayed compared to the 1 minute, but I'd rather it be delayed and I get, the right confluences than enter on the 1 minute and get myself stopped out. Okay, so understanding your time frame and stick to it, guys. Like these are your rules, right? You can't change these rules. Once you've done it, once you've written it, follow it through. If you have to make minor adjustments, make the minor adjustments, but you need to understand that this is like the law of your trading. This is your system and you can't break this, okay? Which trading setups do you trade? Now, everyone has their own little setup, everyone has their own strategy. For me, double bottoms, double tops, head and shoulders. Simple, right? If I don't see that, I'm not entering. If I don't see that break of structure, retest, I'm not trading. Simple as, right? The reason why I'm not trading is because that's my setup. If I don't see the setup, that's not my, position in the market, I'm not trading. And you just have to write down your system. If you trade ICT, put ICT down. If you trade smart money concept, put it down. If you trade Fibonacci, put it down, right? So you need to put these down so so you don't fall for the trap of watching another influencer talking about, I don't know, ICT setups, and then you integrate it into your trading setup, because that's not your plan, and then you're just going to end up losing. What exit strategies do you use? Now, this is something that you can interpret in your own way. It could be either looking at a reversal candlestick or price hitting a key level. For me, I look at it as, I used to look at it as this question, but now I look at it as, how do I exit the market, right? Do I take partials at my first TP or second TP? How do I go about that, right? So for me, I move my stop loss to break even once I'm 1 to 1R. And then when I get to 1 to 1.5, if the trade is not looking promising and it looks like it's moving a little bit choppy, what I will do is I will take partials. Okay. And then what I'll do is once it hits full TP, I will close the trade. But if the trade looks like there's a huge momentum towards my take profit, I will not take my partials, which is 50% partials at 1 to 1.5. And usually what this does is it pushes me to go for that 1 to 3 risk ratio, 1 to 2.5 risk ratio. Why? Because I don't want to take partials at 1 to 1.5 and then I'm closing at like 1 to 2 because there's no point taking partials at that, right? So I kind of changed the interpretation of that. But then again, like you guys can, still answer it as looking at a opposite engulfing candlestick, I'm exiting. Price is at the key level, I'm exiting. Price has on a major pullback, I'm going to exit, look for another entry. And that's actually something that I had in my rules. Back in 2021, I used to tell myself, if I see a major pullback, I'm going to exit the trade, look for another entry to the trade, and then because I've made a bit of profit, especially because I was scaling my account, because I made a bit of profit, I can increase the risk to the trade and put and still keep a nice stop loss. And then it's like I'm following through the momentum of the trade. So then what it is like taking partials. And for me, it was better because at the time when I'm compounding my account, I'm trying to grow as fast as possible, especially when you're trying to like, if you have $100 account, you want to keep as much profit as possible. And so when I used to do that, I used to be able to hold my trades longer because I used to have like 1, 2, 3 trades within one trade setup. And that just helped me so much when growing my account. But now I've kind of changed, I have a larger account now. And especially with funded accounts out there as well, like things have changed dramatically for me as well. And so I don't do that anymore because I don't need to, scale my account really, really fast. I don't have to every trade setup. I can take a little bit more slower because one trade is enough for me for the month, right? So if I take 1 to 2 trades profitable for and then not trade for the rest of the month, I'm good for the month, right? Whereas before it's like my 1 or 2 trades would only be like $50, $100 trades. It's like I'm not good for the month for that. How much interpretation do you have when placing trades? So basically, this is how many confluences do you have, right? For me, the magic number is 3. 3 confluences, 2 primary confluences, and 1 secondary. The reason why I look at it that way, so the primary confluences will be price action and candlestick patterns, chart patterns. And then the secondary confluence will be either Fibonacci, moving average, or anything to do with any indicators that you may have on the markets. But I need to have the 2 primary locked in place. It could even be like, the time frame analysis, right? The breakdown of the time frames. And so I have to have this before taking the trade. How much interpretations do you have when exiting the trade? Exactly the same system what we have with the exit strategy is what kind of confluences do you have? Because a lot of us have confluences before placing the trade, but do we have the confluences when exiting the trade, right? Because a lot of us will, see the market, let's say making its way up, and then as soon as it breaks this structure, you're getting scared, right? And then you exit the trade, but then what happens is price continues to go to your direction. So what confluence do you have, right? Is it the break of structure? For me, if I really need to exit the trade, even if like, let's say I've entered here and I'm going for a buy and then price started to go to my drawdown, if I see that price has, okay, it's forming lower lows, lower highs, whatever, I might just, take this L on the chin and look for another entry. And so for me, the confluences for exiting the trade may be like, breaking of structure to the opposite side, huge engulfing candlestick to the opposite side. Maybe I've just entered too early. Just take the L on the chin. I'd rather take the L on the chin now than hitting full stop loss. And like for example, if you're in a funded account, you're risking 1%, you're now down 1%. So just understanding that really, helps with your trades. Okay, just gonna delete this. Oh, there we go. What is your maximum risk per trade? Now we're getting more juicier now with your system because now we're really building a system, right? So for me, it's 2%. Okay, I'm not risking anything more than 2% per trade, right? Why? Because I want to go. I don't want to risk 1 or 0.5%. I feel like what's the point of trading if you're going to do 0.5% on a trade, right? Even if you have a funded account, like what is the point? With funded accounts, I'll go for 1%. But with like my normal account, there's no way I'm risking 0.5%. Why? Because it takes so long for you to reach your targets. And it's like, if you're confident with your trades, up the risk, you know. Sometimes I'll even risk 5% if I see like a really good setup. And you have to have some sort of risk, right? You can't just trade and be all reserve in trading because it's going to take forever for you to hit your goals, forever to hit if you want to hit, 10K a month, or you want to hit, $1,000 a day or $500 a day. Like it's going to take forever if you just risk 0.5% on a really small account. So understanding your maximum risk per trade, for me, 2%. Okay. And this is what we fixate on. We can go lower, but we can't go higher. If I see a really good setup, I'm not about to just go 50% drawdown. Like, I'm not going to do that. I'm not going to risk 50% ever in a trade, right? Yes, when I started off, yes, I was doing that, right? I'm not going to lie to you guys. I was doing that. But that's because I was a beginner. That's because I was a rookie. And I wasn't experienced in losing in the markets. Now I'm experienced losing in the markets. I understand how much it hurts. And therefore, I'm not going to risk more than 2%. Maximum, I'll do 5%, if anything. But I put on the paper 2% because that's my rules and that's how I'm going to go. If I feel like I want to break my rules today, I'll break the rules, but I'll have to deal with the consequences myself. I'm not blaming anyone. I'm going to take accountability because that's who I am as a trader, right? As a trader, you do have to take risks, right? I'm not going to be telling you guys, oh, only risk 0.5%. I'm not that kind of influencer where I'm going to tell you something and do something different behind the scenes. 100%, I do take risk on certain trades, right? But if it loses, it's on me. It's not on the markets. It's not on my system. It's on me. I'm not gonna blame my system. I'm not gonna change my system because I lost. Because I didn't follow the rules. That's on me, and I take it, and I'm like, okay, cool. You know what? We did take a bit of a risk. It is what it is, right? What is now these two questions, guys? Before I even go through it, these two questions very very important. Very very sorry. Not those two. These three actually. These three questions very very important. What is your maximum weekly drawdown? Okay. What are you comfortable with in losing for the week? For me, it's around 10%. So that means I have to lose 5 trades for the week to stop trading. Like guys, when I say you gotta stop trading, stop trading. For me, it's 10%. Why? Because this is obviously funded accounts a little bit different, but this is because on a personal account, is because if I lose 10%, I know that when I trade next week, and let's say I'm profitable the following week, I can make 5 to 10% again, or I can make if I do a 1 to 3 risk to reward ratio, I'm risking 2%. One trade can get me 6%, right? 2 trades can get me 12%, right? So all it takes me is 2 trades to make my drawdown plus profit, whereas it takes me 5 trades to go to my weekly drawdown. Very, very important. What is your maximum monthly drawdown? Okay. What can you handle for the month? Okay. Now, this is something that I've put as 20%. Okay. Why? Because if I lose 20% in a month, it's like, okay, cool. I'm not doing any more. No more, right? That's 10 trades in a row of losing. Like 10 trades, right? It doesn't even have to be in a row. It could be 10 trades, lost. Okay, I'm done with trading this month, right? And the reason why is because 20% is at the marker, right? Because if I'm usually my minimum for the month is like I make around 10% minimum per month. Like that's my minimum per month I want to make. That's like a good 2 weeks of trading or one week of trading. Literally, one trade can get me 6%. 2 trades, I have to be profitable with 2 trades for the whole month, right? So for me, it's like if I hit 20%, I know that okay, next month I have to lock in a little bit more, make the money. And it's very doable to make 20% of the market in a month or a little bit more, or maybe 2 months or 3 months. But I don't want to go lower than 20% in an account because it's like if I go lower than 20%, 25%, 30%, 40%, when it gets to 50%, it's like, okay, I've just lost half my account. Like half of my account is gone. I don't want to do that. And so I've stuck to the rule of the 20%. I don't want to go beyond the 20% rule. Like I do not want to go beyond 20% drawdown at all for the month. Okay. How do you deal with drawdowns? Okay. Another very, very, very good question, and it needs to be in your system. The way I deal with drawdowns is if I take 3 back-to-back losses, I'm not trading for the day. Okay, so my maximum trades for the day is 3. If I win the first trade out of 3, I'm not trading. If I win, if I lose the first trade, win the second trade, I am not trading. I'm done for the day. So as long as I take 1 win for the day, I'm good. Okay. So how do I deal with drawdowns? If I take 3 back-to-back losses, I'm not trading for the day. If it's like, okay, these losses were like very peak, like prices went straight to my stop loss. It wasn't like unlucky trades. It was like this was bad breakdown. I just wouldn't trade for the week. Why? Because I don't want to waste a week of trading, if I'm not confident in the market, if I know that this market right here is not what I'm liking, like I'm not liking this. And so because of that, if I lose 3 back to back, I'll take a little break, right? I'll back test or do something else, but I'm not going to trade. How will you regain confidence after a maximum drawdown? So if you hit one of these maximums, how do you regain confidence? For me, this week, true transparency, guys. I want to be very transparent with you. I did take a lot of losses this week. I had some wins, but had a lot of losses. And the way I regain confidence is I backtest. Like honestly, guys, I go through my journal, I backtest, I take a breather, I like ghost for a bit in the market. What I mean by that is I will not look at the market for like maybe a day or two. And then over the weekends when the market is shut, I will backtest, understand, okay, for this week, and we're going to do a backtesting video as well, but for this week, what trades could I have taken? Where did I go wrong? How can I not make these mistakes again when it comes to the market? Was this just unluckiness, or was the market really not on my side today, or what was going on with me? Was it my emotions? Was I just having a bad week? Was there something affecting me? And so I will do that psychologically. I also want to make sure that I am ready for my next trading session. So if I'm not confident in my next trading session, I'm not going to trade. And so even for me, like what I like to do is I record some of my trading sessions to watch back and see how I am. And for me, it's like I'll watch my trades, I'll watch how I am and how my motions are, see, okay, this kind of setup, or I'll go through a Discord server, I'll see the setups that I sent out and see, okay, where did I go wrong here? And that will build the confidence back up. Why? Because I am knuckling down. I'm not scared of losses. I'm knuckling down these losses. I'm really going in and I'm checking what's going on. Even the wins, I'll look at the wins as well, see what's going on. And the reason why that's so good is because a lot of us, when we hit a loss, we try to be scared. We get scared of the markets. We try to go away from the markets. And, a lot of people will say, oh, if you hit a loss, stay away from the markets, take a breather. I do the opposite. I'm not going to take a breather because I need to understand why I took a loss. And a bunch of you, especially if you're starting off as a trader, a bunch of you are going to not understand why you took a loss. And the best skill to have is understanding your losses, being accountable of your losses, and just going right back into the market. Like, don't feel like if you took a loss that you have to take a break in the market. Okay. Yes, if you need to take a break, take a break. But don't take a break because you lost. Take a break because you need a break in the market. If you're going through like a winning streak, take a break. If you're going for a losing streak, take a break. But if you took a few losses for the week, or you've hit like maximum drawdown for the week, or if you hit maximum monthly drawdown in like 2 weeks, literally take a proper break for the next 2 weeks and have a look at what's going on in your trades. Take them 2 weeks to maybe go back on paper trading, maybe go and really evaluate, lower your risk, right? Sometimes lowering your risk can build you confidence because it's like now it's like I went from 2% to 1% risk, and now it's a thing where I really have to get good wins to make that money back. And so like even I lost a few weeks ago, I lost like $1,000, and all I did is I lowered my risk. I said, what, I'm still going to trade. I'm not going to take a break with the trade, but I'm going to lower the risk and build the confidence within the market. And nearly coming to the end, guys. What will you do to ensure you are physically fit to trade? Okay, guys, what I mean by physically fit to trade is, are you physically here at the moment? Like, are you here? If you're trading and you've just had like the craziest news, like you didn't make it to college, or you've had like you just like something's happened, you didn't do something happened around you, right? Are you physically here to trade right now, right? Did you miss your gym session? Did you like are you ready to conquer the markets? Like physically, like, are you really here? Like, if you woke up, you're half tired, you're in your pajamas, and you're not ready, what's the point of training, right? But if you're ready, you're pumped, you had a shower, you brush your teeth, you got ready, you know, you're vibing, you had your breakfast, right? You've eaten your food, you've, you know, had your smoothie, right? That's physically trade, like, ready for the trade. Like, for me, have a smoothie ready, you know. I'll have my, you know, warm beverage, or I will, you know, hit the gym, right? I can't trade without hitting the gym. I have to hit the gym. Why? Because it just gets my brain going. And so that's the next question as well. Like, what do you ensure you are physically, psychologically fit to trade, right? Again, very, very close to this question right here. Very, very two very, very close questions. You know, you need to have in your system. Like, I need to physically hit the gym, have my smoothie, have some food before I hit the markets, right? If I don't do that process, or if I don't wake up, get ready, you know, come to the markets, if I don't do that process, I am going to feel very sluggish. I'm going to feel very tired. I'm not going to like the markets. I'm not going to see what I usually see, and I'm going to be forcing trades, right? Psychologically, like, if I've just taken an L in one of my projects, or if I've taken an L in one of my businesses, or like I've taken L's externally from the markets, I'm not gonna use that external emotion to the trades, right? I'm not gonna do that. I need to psychologically get fit, meaning, like, have I read for the day? Have I prayed? Have I, like, ensured that I am psychologically here as well? Not just physically, but psychologically too. Like, is anything affecting me with throughout the day? Like, has anything affected me? Like, if you've, like, I don't know, gone through something crazy in life, like, I don't know, you're about to get evicted, or, you know, you've just lost a family member, whatever it is, like, are you psychologically ready to trade? Because right now you're going to be putting a lot of money to risk, and sometimes it's not good to do that when you're not, you know, ready, right? When you're not psychologically there. And it's an L that you got to take sometimes, you know. And I've gone through it many times where it's like, I've place trades knowing that I'm greedy. I've placed trades and knowing that I'm feeling this fear of missing out. And, you know, like, when you become a little bit more experienced, you feel it in your gut that you're greedy. You've got that fear of missing out. You know, you feel it, right? So having this checklist for yourself, like, I usually, what I do is I have a checklist. Like, have I woken up on a good note, right? Have I eaten or had my smoothie, or done my routine for the day or for the morning? Okay, cool. Have I hit the gym? Cool. Once I've done those checklists and I've ticked everything off, I'm ready to trade. Like, I'm pumped, I'm feeling good. I'm not half asleep, lying down like this. Like, I'm not doing that. I'm really, you know, ready to trade. And what I've done that's helped me, um, is I used to trade on my phone. You know, I used to trade on my laptop. What I've done is I've got a little setup. You know, I've placed a table. You know, I've got a keyboard, got the monitor, got my laptop on the side, and it's like, I don't move my trade. Yeah, sometimes I might move my laptop to the bedroom if I'm relaxing or something, but I try to tend to be on the monitor when it comes to looking at trades. Or, you know, if I'm going on my phone, I'm not going to look for trades on my phone. I'll probably do, like, you know, see if price is near my entry point, or if I've aimed a trade, I'll check it up, you know, quickly do a little rundown, see if it's good. But I won't, you know, be lying down placing trades. And even though that's how I started off with, you know, just on my phone in school, and, you know, lying down and, you know, looking for trades and stuff like that, like, that's beginner, that's rookie moves. We want to become professional. We want to hit that $10,000 a month. We want to hit that 100K a year. We want to hit that milestone of maybe even hitting $1 million in the market. Like, you want to hit those milestones, you got to understand these two questions very, very well. Okay, so guys, I am basically, that's all the questions that we have, right? And once you've answered this, you're going to realize that you have a system in place now. And I'm just going to maybe put this as, no, we'll keep it at 16, but I really just want to, can I? Okay, I can't actually zoom out for some reason, but take a screenshot. I'm gonna try and have everything on the screen, right? Take a screenshot of this, okay? Go through all these questions, and this is your homework, right? This is going to take a time, right? It's going to take time. You won't be able to just answer these questions straight away. Like, it will take maybe like a few trading sessions, understanding the market, back testing, you know, going through your setups, understanding everything. But go through this. It might take you 6 months, right, to fully build a system. But once you build a system, stick to it, and have this printed out, stick it on your wall, and really, you know, conquer it. right? And if anything, what I might do is I might put these questions in the description down below to make it easier for you. But really conquer it, really understand it. Your homework is to answer these questions. And this will take a while. Don't just rush this process. This is the core. Like I said, this is the core for your trading. If you don't follow through with this core, what's going to happen is you are going to rush the process and you're going to make some silly little rookie mistakes. So don't make the mistakes. Go through the system, understand it, and once you've gone through this system and building the system, you have just finally built the building blocks to your trading system, and you can now trade like this for the rest of your life, and it's gonna work, right? Doesn't matter. I've been trading for the past 5 years and I still trade the same way 5 years ago, right? Literally, guys, I kid you not, like I have recordings from back in 2020, 2021, and it's like I trade the exact same way. And it's actually kind of funny because it's like through the journey, I felt like I developed the trading, but it's like I literally trade the exact same way. Yeah, I've added a few little things, but they're not unnecessary things, but it's like I practically trade the same way. But guys, that's pretty much it. I hope you guys have a good weekend. I hope you guys, if you're watching this, please build this training system, do the homework. And if you like this video, if you like the bootcamp already, comment down below anything that I missed out, anything that you want questions on, I'll answer it. Don't feel shy. And if you are enjoying the bootcamp, make sure you like this video, make sure you subscribe, share to anyone that is interested in trading, share this, the bootcamp to them, because, we are really giving as much value away to you guys, and I really want you guys to be profitable, want you guys to make some money as well. And so by the end of this bootcamp, guys, you will be making money. Like honestly, you will be making money. Might not be crazy money, but you'll be profitable in the market. And I can put my guarantee to that because I'm giving my all in every 5 years of experience to you guys. So you'll be 5 years and up compared to all the other beginner traders. But that's pretty much it. And I will see you guys on Monday. So not tomorrow because I don't upload on Sundays, but on Monday. See you later, guys.